Good morning, everyone.
Morning.
It is
Morning.
morning. Oh, wow. Like a school teacher today, or a minister or something. Anyway, it is January 17th. It's Wednesday. We are going to be talking about tax process a little bit this morning. So we have the taxpayer advocate report, which we get annually. And then we also are going to talk about the tax gap and tax compliance a little bit. And then we are going to work on the compact from yesterday, a new compact for today, a quick run through of a captive insurance bill that came over from Commerce that might or might not have revenue impacts. We're leaning towards doesn't have revenue impacts, but we will figure that out. And then in even more exciting news, we have a memo from House Government Operations about sunsetting. This is a fun day today. About sunsetting reports. And so we have to go through and decide which reports we think we want to always get and which ones maybe could dissolve. We will always want the taxpayer advocate report though. And then we have a charter change about local option taxes and then a budget adjustment memo. So it's sort of like it's a nice little housekeeping day, especially after yesterday and the really deep diving we did. So with that, Mr. Dooley, would you like to join us? Thank you. We have his report up on our website if folks want to pull it up and follow along.
Good morning. My name is Jeff Dooley. I am the taxpayer advocate for the Vermont Department of Taxes. And if anyone is unfamiliar with my role, I see it as having kind of a macro and a micro level. On the macro level, I am the voice of the taxpayer within the department. So whenever the department is making any decisions, I'm the person who's trying to look at it from the taxpayer's point of view and seeing if it's have a negative effect on them or if there's a way that we can do things that make things easier on the taxpayers to fulfill their obligations. Also, as part of that macro level, I prepared this report and talked to this committee about any potential statutory changes if I think it's appropriate. And then on the micro level, if there's a taxpayer who is dealing with the department and things have gone off the rails, they can come to me and I'll try to get things back on track for them. Also, as part of that micro level, there's a process in statute called extraordinary relief, where if a taxpayer feels that the letter of the law applies to them in a way that's unfair, unforeseen, or creates significant financial hardships, they can come to me and I'll look at their case, present it to the commissioner, and he can then use his powers to approve or deny that request by the taxpayer. The majority of the extraordinary relief requests that I deal with deal with the property tax credit because it does have well, first of all, it's very complicated, deals with mostly lower income taxpayers, and it does have some harsh deadlines in statute. So those are the individuals who most often need my services. So that's my role in a nutshell. So my report this year, as mentioned, is pretty is not very robust. And part of that is because this committee has worked really well with me over the 6+ years that I've been in this position and had most of the statutory proposals that I've requested have been put into law. And so I looked at it this year and there really wasn't anything that I could think of that really needed a statutory change. I wasn't going to just suggest a statutory change just to suggest one. So, but what I will highlight is a statutory change that was put into law last year. Particularly, it was extending the deadline for property tax credits for people who have filed a homestead declaration but haven't filed their property tax credit. And I think this was a very good change. And So far already, we've had over 100 taxpayers take advantage of this new extended deadline, and we're nowhere near March 15th extended deadline. And I think the person who could run the numbers, give me exact number, was out last week, so I apologize for that. I wanted an exact number, but I think we're probably closer to 150, and I think by the time everything's said and done, we're probably going to be over 200 taxpayers who have taken advantage of this extended deadline.
So, sorry, so that, can you explain that a little more? They filed their tax return and it filled out for their income sensitivity or whatever we're calling it. But they didn't get money back? Or-
No, this would be, they filed Part A of the homestead declaration, which is just getting the homestead rate versus the non-homestead rate.
Oh,
But they didn't
yes.
complete Part B, which is the property tax credit part of that form.
Oh, what would a reason be that the person didn't fill the full form out?
There would be various reasons. Mostly it's they check the wrong box on whatever software they're using to file their form. Because some software vendors ask, do you qualify or do you want to file a property tax credit? And a lot of individuals just don't know what that means. They assume that their homestead declaration and their property tax credit are one and the same. So when they file the homestead declaration, they're like, okay, well, I'm all set now.
I see.
Because they conflate the two. But what's interesting is people who fall into this category, well, going back one step, I get about roughly 50 to 60 extraordinary relief claims around the property tax credit every year. And I would say people who fall into this category of having filed a homestead declaration, but not filled out the property tax credit are probably a small subset of that, probably 10 to 15 of those 60 people. And the fact that we already have over 100 people who have taken advantage of the extended deadline, and we're probably going to have over 200 people, means that what I've always suspected and what I always kind of feared is true, that really only a small subset of people who miss out on this credit for various reasons come across my desk. And so that's unfortunate, but the bright side is that we have been able to reach a much larger population of these people because of the change in the law that you put into effect last year. And so, and going forward for years forward. So this means that hundreds of Vermonters every single year are going to be getting property tax credits that really ease the burden on them.
Yeah, good.
So it's very good change. I'm very happy that we made that change. And I think we really had a good result in that. So I did want to highlight.
Are the specifics of that change in this report here that you've given us this morning? Because I'll bet you about half those people are my constituents.
So as we're working on we're working on a bill around tax sales, and this exact issue of abatement has come up over and over and over again, and really just folks' ability to know how to navigate the process and that the process exists, and, the move from escrow out of escrow and all of those things that you highlight here. I hear you suggesting that we can do more, not necessarily requesting that we do more. And so I'm, curious to hear more about your thoughts on what next steps would look like there. Or even like, there might be statutory things we could do. And then there's also, is there more education we could do of tax, like folks who are supporting tax filing even? So I would sort of include that as a question as well.
Well, we do try to do as much as we can. We do send out letters every year to people who have filed property tax credits in the past, and based on their current year income, it looks like they still qualify. And so that there's a query we run in our system, and we send that letter out in early September to try to send focused mailings to those people. Obviously, isn't a perfect system. We miss people. And we try to put out a press release every year to remind people to file. No one ever picks it up, so it unfortunately. And I mean, it is something that we're always looking at and how to try to reach individuals.
Let me just offer that when you do send out the press release, if you send it to me as well and like put a little note, I'm happy to call a number of papers and talk to reporters directly about it.
Okay.
That little bit of it.
That'd be great.
I think other members of this committee would be as well.
Same.
I'm gonna, sorry, I didn't even interrupt you. I'm gonna let you finish what you're saying.
I think I had finished my thought.
Okay. And then sort of in the details beyond educating tax filers, what could we do to simplify the process?
Really, I mean, I think the program is great. It helps a lot of people, but I mean, I think it would take, in my opinion, it would take a kind of fundamental overhaul of the system, similar to what we did with the renter rebate, turning it into the renter credit and making it really more of a simple, straightforward filing, which frankly is going to be is a tough ask. I mean, anything you do in this program to make it much simpler there's going to be a lot of winners and losers. And some of the losers might be significant. And so that, it is a tough ask, but I think in the long haul, given the population that take advantage of this, in my opinion, there is some value to really overhauling the process and making it simple so that it is, a one or even if you could put it on the IN 111 rather than making it its own separate form that has 27 or however many lines it has on it. But
Thank you. Representative Odie and then Anthony.
Thank you. So you said that people fill part A, but then they think they're done and then they don't fill out part B. So could you have, because there's always so much room, either it's online, there's all this blank space and there's no instruction for anything that I see, where there could be instruction, or on a sheet, could you say, now you have filled in part A, but you need to go to part B, like 3 times. So do that now. Yeah. Room, I bet there's room on the form too.
well, the issue, and that might be true, and then there might be something that we can do on the form. The issue that I find is that most of the individuals who fall into that category are not filling it out on a paper form. They're going through a software vendor, and we work closely with the software vendors, but we only have so much control over the way that they direct people through their process online. So it's not as much about what's on the physical form, it's what their walkthrough tells the taxpayer. So they'll fill out, it'll auto-populate the homestead declaration with the information from the year before, and then it will say something like, do you want to continue onto the property tax credit section? And the person doesn't know what that means, and so they'll just be like, oh, I don't get that, I get my homestead. And because 99% of people that I talk to conflate the homestead and the property tax credit. They think it's one and the same. And so when they say, oh, I already did my homestead, I don't know what this property tax credit thing is, I'll just move on. And that's where the problem comes in. So, I mean, we could try to work with the vendors to get to
Do you want money back?
spur people.
That's what it is.
Well, in your experience, do you have a sense of the folks that you're hearing from? Are they working with vendors? Are they filing by hand? Are they filing with tax preparers?
The majority are not filing with preparers and are using some sort of software. That I would say it's probably about 75-25, probably about 25% of the people I deal with are filing paper forms. But most of those do not fall into the category of having filled out the part A, but not part B. So it really is issues with someone filing by themselves online and just not understanding what the vendor is asking of them.
Yeah, beautiful.
Yeah, I do have a follow. So vendors must want to sell their software. So if maybe we could,
I'm motioning to chair.
oh, him, all right. So I'm just thinking that maybe there's a chance to be even more influential with them, like saying, this is what you have to provide your form if you want us to deal with you, and I'm sure you want to deal with Vermont, something like that. Or if that doesn't work, maybe you can give 5 stars to anyone who, to the software vendors who make it really clear. You know what I mean? Give them a ranking or something. I don't know what's legal. Anyway, and then the second thing is, if you, the chair said, give her that information. If you put that in the form of something that state representatives can post on Front Porch Forum, exactly in that form, they can cut and paste and then send it to all members. We could, and if you can't, then you could send it to one of the people on the committee. We could, but then we can ask people, please post this on your Front Porch Forums, and that would be something.
Definitely, I'm definitely open to anything we can do in late summer, early fall to get the word out, to get as many people to file. So if members are willing to work with the department to get that message out there, I think that's definitely something that we could do going forward. To the first point about the vendors, it is a little bit of a difficult issue. In that respect, I mean, Vermont's a relatively small state, and so they have a little bit more power in that dynamic than we do, if I'm being frank.
Yeah. That's why I thought.
Representative Anthony?
Yes, I agree with you. It would be nice to overhaul, as we did the renter rebate. The stumbling block that I have encountered, and I'm a paper filer guy, is the household income declaration. I guess that's part B.
Yeah.
It's quite eccentric, maybe a little too strong a word, but it counts some kinds of income that are not counted by the federals. And in some years, as I was reminded, some relief payments are not counted. For instance, flood relief this year. So
If we pass that,
excuse me?
if we pass that in this year, right?
Yes.
Yes.
But I mean, that's very unique to Vermont, to this year. And so no wonder the vendors don't pick it up. And unless we are willing to get very much less eccentric about insisting people count some kinds of relief or subsidies, whatever you want to call it, I don't know where we would go with that. It's not simple unless you want to abandon some of the 20 lines that are on the form.
You're exactly right. And I mean, I don't know if I included this year, but one thing I've mentioned in the past is there was at the federal level this definition of modified adjusted gross income, which is adjusted gross income, I think, plus 2 or 3 different things, which are don't apply to most people. And so I guess that would be one way to go with not completely overhauling the system and eliminating the 20+ lines is going to like having 3 or 4 lines. But again, there will be winners and losers if that happens. But I do think that there would be a lot of value in making it simple and something that someone could understand. Because to your point, this system is unique to Vermont. There's no other state in the country that has anything similar to the property tax credit the way we have it in Vermont. And so that does make it difficult. And, frankly, a couple of people who do come across my desk every year are people who've moved to Vermont and they've kept their preparer from whatever state they've moved here. And the preparer just doesn't understand the property tax credit system because they've never done it before. And, it's not similar to anything that they do with any other client. So
I would like to take inspiration from the federal overhaul of the FAFSA for all things that I do this year. It might be I don't know if anyone else got to experience the two versions of the FAFSA, but it is an incredible, it is a brilliant piece of bureaucratic paperwork revision. Representative Sims, and then
Not my lived experience.
this year?
Yes,
Oh, okay, let's talk about that.
yes.
So I don't think I was here when we made changes in the renter rebate credit, so I guess I'd love just like a small on that end, or you keep mentioning winners and losers, can you be a little bit more explicit about what, who winners and losers and why, if we made similar changes for the?
Well, for the renter rebate, the renter rebate before it turned into the renter credit was very similar to the property tax credit, where you had to fill out a household income schedule and you had to get a landlord certificate and everything along those lines. Now there is no household income schedule required. It's based on the correct me if I'm wrong, because I'm not as well versed in the renter credit as other things, but it's based on, I believe, the average rent in the town the person lives in, and then it looks at the income reported on the IN 111 and determines the credit that's due based on basically those two factors. And so it's not.
It sort of moved from a complicated tax structure based system to much more of like a human services based benefit system. And there's a lovely report about it that we can send to you to.
But in terms of winners and losers, yeah, like if we move to a similar structure for the property tax credit, I mean, there are people who get, well, it's based on a number of different factors. It's based on the house site value, it's based on household income, and then if the person's below the quote, circuit breaker, then what the municipal taxes are in the town and what the property taxes are in the town. So some people would be losing hundreds, if not over $1,000 in tax credits if you go to a simple credit saying your income's this, and you live in this town, so you automatically get this. So some people would be getting, instead of getting $4,000, would be getting $2,800. And some people who, are currently getting $1,500 would be getting $2,200 if you just simplified it based on that. But so it would be difficult for some people because their property taxes would be going up and they wouldn't understand why. But I do think once you got through the initial 1 or 2 years of pain of that, I think it would be beneficial to the taxpayers of Vermont at large to go to that type of system.
So I think I hear you saying that we have a lot of complexity in order to get very specific benefits to each person and related to the actual value of their home, their actual properties. We could have a simpler process that gave a specific benefit based on income, but we'd lose that ability to sort of adjust it person by person.
Right. To the point made earlier, there's these 20 some odd lines, and all of those came about because there were specific individuals or groups of individuals who are like, well, this person is getting too high of a benefit because they're getting this income, but it's not being reported in adjusted gross income, so they should get a lower benefit. And then there's these other group of individuals where, well, they're not getting a big enough benefit because we're counting this in household income, but we don't feel that, we should really be including that. And so over time, it's turned into this incredibly complex form.
That's subject to political wins, let's be.
Yeah, and yeah, so we're trying to make it as fair as possible for every individual, but once you get to this point, I mean, it's so complex that how do you even really determine if it's fair when there's so many moving pieces?
Folks accessing the CTC and the EITC who might not necessarily file, you have thoughts on that?
It's an issue. It's an issue we're aware of. It's a very difficult issue to address. I mean, most.
I don't necessarily mean folks without social security numbers. I mean more just folks
Yeah.
without substantial income.
I mean, I've had discussions with legal aid about this and trying to reach those individuals. We try to do outreach about the fact that these things exist. One of the problems is that a lot of the individuals who don't file with us, that it's a choice. They don't necessarily want to be dealing with us. And it's difficult to reach people who don't want to be reached. And in fact, I remember I was talking to someone last year who actually was an attorney and suggested like, well, could we put something, I know you said this is not specifically what you're asking about, but can we put something specifically into law that if someone who is undocumented and doesn't have a social security number files with the department, that you're not allowed to contact INS to let them know that they exist? And I want them to know that we already can't do that. Our confidentiality,
Put that into the bill.
our confidentiality statute like doesn't allow us to do that, and we would never do that. But the fact that someone who is an attorney and was fairly sophisticated thought that that was something that we might do lets me know that I can't imagine that someone who is in that circumstance, who is undocumented, probably fears that 10 times as much as that individual does. So that it's a difficult situation for that particular population, getting them comfortable with dealing with the government.
I understand there's a sort of another category of folks who Representative Brannigan brings up fairly regularly, being from where she's from, where that like just, deeply don't want to engage with the government. And that is absolutely a reasonable choice as well.
Yeah.
I think there's sort of a third category of folks who just don't know that this is available to them.
Yeah. I think there is a category of individuals who, for whatever reason, their income is low enough, or they only have social security income or whatever it is, that they don't have a filing requirement with the IRS, and therefore they don't have a personal income filing requirement with Vermont, who might be entitled to various credits, property tax credit, child tax credit, EITC, whatever it is, that don't file with us. And again, we've thought about it, we've had discussions about it, and I don't have a particularly
Okay,
good answer for how to address that.
let's keep on thinking about it.
Okay.
Thank you. Any other questions for Mr. Dooley before we bring Commissioner up?
Can I just say thank you so much for your work on behalf of Montrose? I think it's really important.
Thank you for saying that.
Yeah. Well, you probably don't hear that.
I appreciate that.
I absolutely, I think we all send constituents to you on the regular and very much appreciate you caring for them.
Thank you.
Thank you for your testimony. Commissioner, talk about more about taxes.
Yes. Best subject in the world.
Here.
So I think Maude is gonna share screen for me. Got presentation this morning. I'm gonna follow along on my own paper copy.
Oh, nice. Nice adaption.
Yeah.
Appreciate that.
So we're talking tax gap today. We can go to the next slide, please, Maude. So let's start with, Craig Bolio, Tax Commissioner, for the record. Let's start with what that is, right? So the tax gap is the difference between what should have been reported and paid in taxes to Vermont and what actually was, right? And so there's a number of different things that can go into the tax gap. That could include people who just didn't file at all and didn't report income at all, didn't pay at all. Could be people who filed but underreported their income. Could be people who filed and reported all their income but didn't pay all the taxes. And it could be people who took credits that they weren't entitled to. right? And those are like the big four main categories. And it's really interesting because if we hit the next slide, Maude, you'll see a breakdown of our collections at the department. This is one of my favorite charts to show, and one of my favorite stats is because it really shows, for better or worse, the US tax system is based on voluntary compliance, right? So these are fiscal year 23 numbers. We collected what, 2.7 billion total. 97% of that came from voluntary collections. So we stood up the system, we published the forms, we wrote the instructions, we published guidance, and our phone lines and email accounts were open to help people. And the money and the returns and the information came to us.
Just
That's all we had to
plug
do.
in, like
We cash,
of money.
we cash the check and we say thank you, right? And then 3%,
Yeah, sorry, one second.
oh yeah.
Do you have an idea of how that compares to how other states do?
Well, I don't know about other states, but I'm going to have a comparison to the IRS later. It's interesting. The IRS's percentage is about 1.5% of revenue comes from collection activity. So we're a little bit higher than that. I don't know reasons for that. I don't know. I wouldn't read too much into that, but what I take away is we appear to be similar to the IRS. And I think other states are in this ballpark as well. So when I say compliance revenue, what do I mean by that? So I mean accounts that we had to send a bill. So that might be either an assessment where they filed and they didn't pay everything, or we made an adjustment. It might be a non-filer, right? So for our business taxes, for instance, sales tax, you've got to file periodically. And if you don't, we'll send you a non-filer notice that says, hey, you should file. So that would be included. Audits, and then offsets. So that might be an internal offset for us. So you get a personal income tax refund, but we know you have a sales tax account that's delinquent. We can offset that money to pay that sales tax debt. So all of that stuff is included in that compliance revenue. And if you could move to the next slide for me, please, Maude. This is another really interesting chart for me. This is, so that category of compliance revenue that I just talked about, this is tracking it over time from 2017 to 2023. I would go back further, but 2017 is really the first year that we were like fully up in VTax. And so that sort of shows the trend that we have with our new system. And, we've got a little bit of a dip between 2018 and 2019. 2020, we've got a big dip. That was the COVID year. And essentially our compliance division moved to issuing grants from the coronavirus relief fund. So not a lot of compliance revenue there. But you can see at a high level, the trend is up, up, up. And sorry.
So since total dollars that you were able to get back that was not given.
It was not voluntarily. Yes. Yeah. So this is all of those categories. So build, non-filer, collections, audit, offsets. That's this category of money over time.
Is the percent of potential, so like trend looks great if the amount that you could have gotten back was greater.
Yeah. So we've never estimated the tax gap in Vermont, and it's really hard. So we'll talk a little about the federal tax gap and the methodology that they use. They have access to federal data through the Census and Social Security Administration to help do some of their projections that we don't have access to. So it's really hard. So I don't know what the pie is in Vermont. And I'll talk more about just a rule of thumb to scale it down. But the other part of this equation that is important to me is, at least from my chair, from what we can see in our internal data and how it feels about the kind of information that comes to me, and I'm hopeful you'll agree, because I've heard from legislators, comes from you, is we're also having fewer complaints than ever, right? About unreasonable action from the department or mistreatment of taxpayers, right? And so what this is showing me is we are getting more and more money while having fewer and fewer people upset about the actions that we're taking. More and more people are at least understanding service-oriented approach, even in the area of compliance, where you're dealing with the folks who are not necessarily doing the right thing on their own and need either some education, some assistance, sometimes coercion, but hopefully not.
Do you have a sense of the income levels of the folks that are in that category?
Oh, I think it really runs the gamut, right? Because this is everything. This is compliance revenue on all taxes. So it's not just income taxes. So this could be a very small business that files sales taxes annually that didn't, and then they sent us a few $100 when they filed. It could be a big corporation that didn't send all their estimates and got a big penalty. It could be a big audit adjustment that we did on, again, maybe a big corporation that's $1 million plus penalty and interest, right? So
You have that
Oh, that's right.
somewhere?
I have it broken down by tax type. Yeah, I don't have it in this presentation, but we have that data.
I'll have to see that sometime.
Sure.
I must be missing something, because it seems to me that if it's going up, you're collecting more from compliance revenue, means more people are not complying.
So that's a very interesting question. I think that's one possibility. I think another possibility that feels more intuitive to me is we've gotten better over time, right? And I'll talk about some of the strategy that we've employed and the philosophy change that we've employed that I think is having a meaningful impact on this. So that's one possibility, but the trends in the federal tax gap haven't changed significantly over the last decade plus. So I don't know that I would intuit that they've changed significantly here. I think we're getting better at finding it and engaging with taxpayers in a way to expand our reach, be more efficient, fewer touch points and less time on each individual compliance case to try to get more impact, is what I'm imagining.
Representative Anthony. A companion question to our chair asking about different income brackets. How about a form of filing, that is to say, an S corp, a partnership, where those, if you like, fall in terms of the grandness of the success?
Well, you'll see some of that in the federal data. I don't have that for Vermont easily because we bucket all of that into business income tax and then it flows through to personal income tax.
Yeah.
So I know how much is business income tax versus personal income tax,
Yeah.
but the subchapter S versus LLC, not as much. I mean, I think, give me a couple slides and I'll see if we can at least answer some of
Thank
your
you.
questions
Yeah.
at the federal back. Also, I have to say, Rep. Anthony, I heard in the prior testimony that you filed by paper.
Yeah.
I thought we were friends. I'm just-
I don't trust the turbos of this world. Thanks. I want to know what's going on.
So let's move to the next slide and it'll be the federal tax gap. So, maybe a little bit hard to see. There's a lot going on this slide, right? So there's a few things. No, this is from a publication by the IRS and I've linked it on the presentation, which should be available on the website. So this is one chart of many. And the IRS every few years estimates the federal tax gap. And I find it to be one of the most fascinating documents. And so if folks are really interested in this topic, would certainly recommend publication 5869. It was last updated last October. I think they do it like every 2 years. But let me highlight a few things that are on here and in that report. So the first thing I would say is that the IRS estimates, and all of these are estimates. I'm going to probably stop saying estimates, but just know all of these are estimates, right? So the IRS believes that the federal tax gap, gross tax gap, which means no IRS compliance activity, is $688 billion for tax year 21. Billion with a B, right? So it's a staggering amount of money, right? And that would set a net compliance rate of about 85%. And then after the IRS's compliance activity of $63 billion, which is about 1.5%, right? So that's interesting. It's in the same ballpark as us. They have a net tax gap of $625 billion. So a net compliance rate of just over 86%. So for every dollar that the IRS is supposed to be getting in tax revenue, they get a little over 86 cents.
How do they know?
I'm sorry?
How do they know?
So
How do you understand it? How do you measure an absence of something?
that's a great question, and I can't speak to all of it, but my understanding is that they're grabbing data from the Social Security Administration, from Census, and other areas that they have to be able to try to estimate that, and then of who's not filing. And then they have scaling factors based on their historical trends and research and studies about underreporting. Because they've been doing this for a while. So I think there's an art to it for sure. And I certainly can't speak as the expert for what the methodology is, but they speak about a lot of that in the report, and it feels pretty robust. So if you were to just take that number, 86.3% compliance rate, and apply it to the general fund revenue that we collect at the department, you're talking like $350 million, $400 million, right? So that's a lot of money. Now, there are reasons that it might not be like that, right? The feds have a more robust payroll tax We have things like sales tax and meals and rooms tax that the feds don't have. So the composition of a tax gap might not be the same at a state level or a federal level, but suffice to say, there's probably some real money that is out there in the Vermont tax gap that I think is one of the foundational jobs of a tax department. A couple of other sort of interesting things that I find on this. So they break down the bottom half of this slide is sort of breaking down where they estimate all of these things coming from, right? So they say that non-filers represent about 77 of the $688 billion. So that's about 11% are people they think just don't file at all. But underreporting, so people who file but don't report all of the income, is 542 billion of that 688. So almost all of it. And the big chunk of that is personal income tax, where they have an estimate of 396 billion of the federal tax gap. About 58% is just from underreporting on personal income tax. And in a couple of slides, we'll talk about where on the personal income tax they believe that is. Other big things that jump out at me, again, employment tax. So the FICA taxes, the payroll taxes, they think they've got a big gap there. 68 billion, I think is what I'm seeing from self-employment tax, right? And then another
Question about
30.
that too.
Sure.
So I've been thinking a lot about that in the context of sort of self-employment, but also the idea that when folks are not hired as employees and are rather sort of moved into contract workers.
Yeah.
And in some ways, that is also, it's a tax evasion strategy in some ways on the behalf of the employer. And I'm wondering if that's accounted for somewhere.
I don't know how it's accounted for in this projection, but I would assume that some portion, maybe a significant portion, I'm not sure, of that, the self-employment tax gap there are people in that situation.
Representative.
Also, Commissioner, the category individual is in some sense simple but misleading because there are lots of folks who file an individual return, but nevertheless are part of some more complex aggregate, like a partnership, like whatever. And I'm not sure how the IRS is actually counting them, but those also happen to be notorious categories for underreporting.
That's a beautiful segue to my next slide. We're friends again. So if we could move to the next slide, please, Maud. So this is, again, one of the more fascinating slides I've seen. So this is talking about the gross tax gap for types of income that has to be reported on an individual income tax return. And back in for tax year 2014 and 16, so they haven't done this for a little while, but the IRS estimated the percentage of underreporting for folks who filed based on certain types of income. So on the first two bars where you see the 9 billion and 1%, and the x-axis says income subject to substantial information reporting and withholding. That's W-2 income, right? So what the IRS is saying is when there's a non-filer group, but when we get a return, we believe W-2 income is reported 99% accurately.
Yeah.
You move to the second category, income subject to substantial information reporting. That's most 1099s, right? And so again, 6% underreporting is the estimate. So 94% accurately reported. Income subject to some information reporting, third category, we're up to 15%. Now that's K1, right? So now you're talking subchapter S, partnership income, capital gains. And then you go to the far right, information subject to little or no information reporting, Schedule C, Schedule E, Schedule F, the things that don't have a document attached. And I can speak as a tax administrator as to why that's so challenging. But the IRS for tax years 2014 through 16 estimated that gets misreported by a factor to 55%. So only 45% of that income is reported on tax returns. And that is a staggering chunk of the individual income tax gap, right? And that's the hardest stuff to find, right? I mean, it's intuitive as to why these other things are reported so strongly, right? The compliance rate we have for employers sending us W-2s, so that if you misrepresent what's on your W-2, we can send a letter that says, hey, we see you worked for Bob's shop and this was your income. Tell us what's going on, right? It's a lot harder to get those kind of things through. These areas that have no income, no information backing, you need expert auditors to dig into that and look through books and try to deduce what's going on.
Representative Andrews and then Deborah.
Commissioner, could you tell us a little bit more about that category? So when you say Schedule E, Schedule F, I don't
Yeah.
know what that means. So can we say-
Yeah, absolutely. Business income, rents, farm income, that kind of stuff. So things, yeah, well, a lot of like self-employment kind of income that doesn't get reported through a K-1.
Like when we talked about all that pass-through income last year.
Right.
Well, but pass-through income would usually get reported on a K-1, so that would be in that third category.
I'm sorry, so Deborah then Sims.
Commissioner, can you extrapolate based on these numbers?
Dangerous word.
Oh. I guess, given that you know where those categories are that under reporting is, can you take those categories and look at Vermont tax returns and have some sense of what the gap might be for Vermont?
Yeah, I mean, I suspect that the trends that are seen at the federal level will be similar for Vermont, right? Because for personal income tax, with a few things that we differ on, we work from adjusted gross income. There's more to it than that, the non-filer gap, the underpayment gap, like we can report on the underpayment gap. So, yeah, I mean, I think we would see a similar breakdown on where our challenges are as well. And I think that that's going to be the case for every revenue agency around the country, right? They're all dealing with these same kind of challenges, having better data than they've ever had in the areas that information can be provided, and then struggling in the areas that they can't.
Oh, sorry, nope, it was Sims next. Okay.
I have said that we have an additional problem on our eastern border because there's quite a lot of cross-border business.
You made it sound like we were in a war zone. It was sort of exciting for a
I
minute.
like to think of it as the Eastern Front.
That's even more.
He's not here. The guy from the eastern-
Sorry, continue. I'm sorry to interrupt.
Because documentation can come from several sources, but not from New Hampshire.
Yeah. Yes.
Surprise.
Yeah, I mean, I think, yeah, I've had people in my own life as we're going to New Hampshire be like, let's go buy some stuff because it's tax free. And I'm like, you can't say that to me.
Cross-border employment too.
Well, I mean, that's its own new challenge, right? In the hybrid world, and different states are taking different approaches on that. Some states are taking aggressive approaches on that, which I think are particularly challenging in those cases because the states that are taking very aggressive approaches it's not their own state's residents who are harmed by that. It's another state's residents who are harmed by that. So it's putting states in really challenging positions.
While you're talking about it, can you describe what the law actually is with regards to people who might work remotely in?
Well, I can tell you what it is in Vermont, right? So in Vermont, it's the first question is, are you a resident? So if you're a resident, all of your income is taxable to Vermont. So let's take a simple example where you live in Vermont, but every day you drive over to Massachusetts and you physically work in Massachusetts for a company there. You would file a Massachusetts tax return where you report all of your income to Massachusetts because you worked physically in Massachusetts. So that's Massachusetts income. And then you would file in Vermont with all of your income, including all of your W-2 income from Massachusetts. You would get what's called an other states credit from Vermont for the taxes that you paid to Massachusetts so that you're not double taxed. If you were to be working in Vermont remotely for a Massachusetts company, between the rules of Massachusetts and Vermont, you would no longer be filing a Massachusetts tax return for that. It would not be considered Massachusetts income anymore because you're no longer physically working in Massachusetts, but you are in Vermont. And sort of vice versa, right? So if you lived in Massachusetts and you drive over the border to Vermont and you work there every day, you'd be filing the non-resident return with Vermont, and then you would file in Massachusetts with all your income and you get another state's credit from Massachusetts. And similarly, if you worked from your home in Massachusetts, working remotely for a company in Vermont, we would get no filing from you because that would not be considered Vermont income. So it's really, where are you physically working and are you a resident? Did that answer the question for you, Madam Chair? Perfect.
Representative Anthony, and then we're gonna,
And then there's, if you happen to be working in the field of interstate transport.
I need a lawyer to help me with that one.
Okay.
Yeah, I mean, there's specific rules for industry like that as well. And, you know, sometimes counting days and miles. And so it can get really complicated, absolutely. And compliance there is a challenge, right? I mean, this whole space of hybrid work and cross-border working. So if we could move to the next slide, please, Maude. I just want to point out, I know you've seen this before, but of our 3 department goals, number 2, reduce the tax gap, right? Again, I think it's foundationally the job of any revenue agency to try to reduce the tax gap. We're not naive enough to think that it can be closed, but because you know, it's bigger than we have compliance capacity for, and you're never going to get everything, but we've got to do everything we can to reduce it. And so I wanted to talk a little about our compliance philosophy. If you could move to next slide, please, Maud. I'm just assuming it's happening. She's great.
yeah, we'll tell you if it's.
Okay, perfect.
You can trust me.
She's on top of things. So again, with our compliance philosophy, I tie that into the 4 core values, right? And maybe it's maybe sort of a silly question, but it's a question that we answer internally, like, why do compliance, right? Like what, obviously it's intuitive. People have to pay their taxes. And so if they don't, you have to help them get there through compliance. But really the goal of it, right, is to make sure that there's a cop on the beat to level the playing field for everybody. Right? Taxes have a financial impact on individual households and businesses, right? And so you saw at the beginning, 97% of the income we get comes in voluntarily. There's a tax gap there that's not represented, but the vast, vast, vast majority of people are doing the right thing, right? So we've got to do everything we can as a department to make sure that they're not being unnecessarily harmed by folks who are not doing the right thing. But then we have to ask, what's the most effective way to do compliance? Right. And I think that that's sort of a philosophy shift that we've engaged in over the last 10 years. And I do think around the country, this is sort of a philosophy shift as well, right? That if you think about the compliance division of 30 years ago, right? And you think about the state of Vermont, the Vermont Tax Department as well, right? You would think about sort of adversarial audits, heavy-handed collection tactics, or that's what you think about when you think of a compliance division, right? And that's not the approach that we take. And it's not because we want to be soft on people not doing the right thing. It's an acknowledgement that again, even within those who are part of the compliance revenue, who are not voluntarily complying, overwhelming majority of those folks are not in that group out of malice or fraud. It's not knowing what to do, not knowing how to do it, not knowing what's reportable, right? And so education will get them into the right camp as opposed to a heavy-handed tactic. And we have those tools. We want to reserve using them for the cases that truly require it.
So separate from malice and fraud or not knowing, what about folks who are making very rational decisions given the tax structure itself? Because we have lots of ways for people to legally avoid taxes, but maybe not meet the spirit of the law. Is that something you've given thought to?
Boy, that's a powerful statement. Legally avoid taxes. I mean, I guess I would say if it's legal, then it's not.
Holes.
Yeah, I mean, it would.
Which our federal structure, I think, is sort of well acknowledged to be.
Sure. I mean, I think I would acknowledge that there are loopholes at the federal level. Sure. I think as you get into individual ones, right, one person's definition of loophole might be another person's definition of totally valid tax policy.
I'm saying people are making rational decisions.
Yeah. So I mean, we wouldn't consider that part of the tax gap, right? If it's legal and they can do it, then they can do it, right? At the department, we don't write the laws. So we just administer.
So, but do you have any thoughts about what some of those, whatever word you want to use to describe them?
Federal tax. No, I don't have federal tax.
Or on the state level, do you have any thoughts?
I mean, I think we've been doing a lot of good work on that, right? We talked a lot for several years about the corporate reform that I thought was really helpful on that front. I did use the word, I think I used the word loophole in describing the 80/20 companies. So, I mean, I think we've been doing a lot of good work on that. I do always advocate it's challenging to ever deviate from the Internal Revenue Code as a state tax agency, especially one that's as small as Vermont, because that creates its own compliance problem. If somebody from a multi-state or multinational company has to do something special for Vermont, it can become really challenging. So yeah, I think we've been doing some good work on that, but I don't have like a list of federal loopholes with me.
Representative.
Just remind me of the conversation we had the other day offline about 35 different tax types, and maybe
Yeah.
better opportunities to sort of streamline and create more consistency and equity that I hope we'll continue talking about this.
Yeah, I mean, I love that idea. So yes, we have, I think it's 35. I might be off one or two, but we have a lot of tax types at the department, and right? And so we have big ones that everybody knows about: personal income tax, sales tax, meals tax, corporate tax. We have really small ones too: wind, electric generation facility tax, railroad tax, telephone gross receipts tax, right? And a lot of those are from a long standing tradition of trying to, again, make sure that we're creating effective policy for the economy that we have. And tax policy doesn't always keep up with the economy, right? So it's something that I have thought about internally of, is there a way to consolidate some of those? I don't have any proposals with me today. The challenge that you hit with that, right, is that you think that's such a great idea, and then you start to dig in and you're like, oh, here's the reason that was set up that way. And then trying to figure out a solution to some of those things can be more challenging than originally envisioned. But I'm always open to talking about ways to eliminate some of the smaller taxes. So if we could move to the next slide, please, Maude. So I don't usually focus on the title, but I do here. We take a service-oriented approach, right? And I've got three high-level bullets, right? So one, big data. See what I did there? Thanks, I'll be here all week. Tip your weights down.
Font did it and then
Yeah,
mashed it with the
That's right.
font.
That's right. Absolutely. Yeah. Took me hours to put that together.
I know, I can see that you practice.
So what does that mean? You've heard that term before, right? So we have more data than we've ever had, right? VTax, our computer system that I know folks here have heard about, is very powerful. We have more data sources. We have high compliance rates from employers sending information, from the IRS sending information, from third-party payment aggregators sending information, from our own integrated system that has one look for almost all of our tax types, being able to cross-reference data. So that means that we're taking more data-driven, equitable, defensible decisions, particularly in the area of audit, than we ever have before, right? Again, before you had all this data, a lot of it came from something like a referral, where you'd see something at one business, realize that was a problem for the industry, and then suddenly you're auditing an entire industry in the state of Vermont. And that can become challenging, right? That was some of the heat that we used to take before we were able to do this. Now it can be a lighter touch, right? We see an industry problem. We can do industry outreach. We can do a letter campaign, right? It doesn't have to be thorough audits for everything. And those tools are effective. The second one, expanding our expertise and reach, right? So again, as we've gotten more data and we've gotten a more powerful system, that's allowed us to move resources away from clerical type of tasks to more in-depth and expertise work. So I would say that the level of expertise at the department has increased over the last decade in terms of what we bring to the table with our examiners and auditors, right? And we're able to take more time to train up on other areas and learn about other things. So one of the areas that we're really focusing on now is corporate audit. We have done a lot of work over the last decade on personal income tax desk audits. A lot of that comes from federal data. Our field auditors have always been trained on doing business taxes, sales taxes out in the field. And now this is sort of the next frontier, especially with the corporate reform that we just passed, right? It's the right time to be doing that. And also, diversification of the audit team, right? So the field auditors, they only used to look at trust taxes out in the field. So what happens if they found somebody not reporting income taxes as well, right? That can absolutely happen. Now you've got one touch point and a comprehensive audit that's looking at the whole picture, instead of either just missing that wholesale or having to have two different audits under two different auditors at the department. And improving education efforts, right? So we do a lot of industry outreach. We have more educational cases than we've ever had before. A great example that I like to point to that I think encompasses all three of these things that we did shortly after we launched VTax was, it's called a 1099 campaign for restaurants. So 1099Ks are given by credit card processors for how much credit card payments you took, right? So this was a great example, and we had a set of data that we could look at, right? And you've got a reasonable, maybe your restaurant is expecting 75% credit card payments, 25% cash, right? But we could look at this 1099K data and see, well, that's interesting. You have 95% of your reported sales are what shows up on this 1099K, except we would have expected a 25% cash ratio. Or maybe the amount you reported on your meals and rooms tax return is less than we see on the 1099K. Then we've probably got a real problem, right? So instead of doing full audits for every one of those businesses, we did a letter campaign that said, hey, we have this 1099K. We see the amount you reported on your tax return. That looks a little strange to us. Why don't you take a look? And if you agree that it's strange, amend the return. And if you don't agree that it's strange or you think that we're wrong, tell us why, right? And both of those were valid options. And if they would explain why we were wrong and we would take that. And if they chose not to engage with us at all, then we might decide to pursue full audit, right? And the impact of that was significantly increasing the amount of taxpayers that we could touch through the compliance process with a service-oriented approach, increasing compliance revenue with less heavy-handed tactics that also improved voluntary compliance moving forward, right? Because they had an understanding of the tools that we had and they knew that we could find them.
I really, really appreciate you describing sort of that really positive regulatory approach that you're taking so much. Like that is, I think, what we want to see in state government. I am curious, as you sort of step more into the corporate space and sort of nationally and globally, we see more sort of pressure to litigate rather than comply. We've talked a lot about sort of towns' ability to withstand lawsuits or defend decisions they make in the context of the education fund. But I'm curious about the department's ability to do that in the case of, say, I'm using corporate as an example because it seems like where you sort of see the most resources available on the other side. But
Yeah, that's a great question.
sorry to not like let you go out with this big
All good.
bang. But
I want to say right now, I don't have concerns, but let's keep that as an open conversation. And the reason I don't have a lot of concerns with that right now is we're starting to really dip our toe in the water on this in a meaningful way, right? So I wouldn't say that we've fully jumped into the pool. And so maybe when we do that, we feel like we're underwater and can't keep afloat. But we've had some real successes so far that has not created significant litigation. As folks know, I can't go into specific cases, but just we have had some successes here, some of them significant in terms of revenue numbers, that has not created a massive influx in litigation. And so my hope is that that trend will continue, but I don't have a crystal ball.
Thank you. Representative Anthony, and then we do really much,
All right. Commissioner, sort of following on the theme you just mentioned, the accounting profession weighs heavily in the movement of the IRS in terms of improved practices and whatnot in reporting. And back to a comment our chair made about loopholes. Are you required, or is it a policy of the Vermont Department to accept practices, procedures in accounting that the feds bless, be they safe harbor kinds of provisions that if you follow these rules, we're not going to argue with your calculations. In that sense, I mean safe harbor.
Yeah.
And because one person's safe harbor is another person's loophole, if you will.
Yeah. So let me answer that generally.
Yeah.
Sometimes it's right in law, right? And in that case, absolutely, we have to. Other times it may be that it's not necessarily a federal law or a Vermont law, but we know that that's the rule of thumb. That's the way the IRS has done it. So we don't have a requirement to do that. I would say, though, generally, we will follow IRS practices on something like that because, again, it's challenging to deviate from federal policy because that puts so much more of a compliance burden on us. And then you get into your own sort of equitable outcomes there, right? Where it's like, well, if you say the rules are different, but you don't really have the resources to do that compliance, are you really creating a more equitable outcome? And totally understand, Madam Chair, wanting to move on. I would just flag, I have a slide on all the different education.
You're welcome to pop over that slide if you want.
Oh, yeah, sure. Oh, yeah. Yeah. So this one here. So we've got compliance corner where we talk about what we're doing. We have industry guidance. Again, being transparent, getting the information out there. So you will have people who interact with you and change their behavior without you even having to interact with them in a compliance way. We've got more fact sheets and guides than I can count. There's a ton of them, and also industry guidance. So, you know, we've got things for florists, for maple production, for linens rentals, and a whole bunch of other stuff, right? That has either come from what we see internally, maybe has come from audits that we see are a challenge for industries that, again, we want to get out in front of these kind of things, give people the information. And a new business outreach program that we launched last year, which is we issue licenses for new businesses so we know who new businesses are. And we are doing this partially through word of mouth, partially through invitation, but saying, hey, you're a new business. This is not an audit. If you want to talk to us about what the tax rules are and specific challenges that your business might see, come talk to us. And you can sit down with one of our auditors one-on-one, learn what we know and some of the challenges that maybe we've seen in the past, and get you on your way in a healthy start for your business. And that's been really cool, and a lot of positive feedback from that. That was one that I think we really started to think up during COVID about what kind of ways can we interact as a compliance division in sensitive times for folks, right? And so that was one of them. I would just say very quickly, what's next for us, right? So we're focusing more on e-commerce, right? Particularly post Wayfair, making sure that we're being equitable in terms of the amount of resources that we would put on e-commerce businesses versus Main Street mom and pops. Continuing to hone in on sales suppression and non-reporting of cash transactions. And a lot of times we're doing that with a shorter horizon on an audit. Instead of doing a 3-year audit, maybe you do a 3 to 12 month look and then highlight the issues if they're not significant that you need to fix. And then we monitor for the next 3 to 6 months. If you're good after that, good to go, right? Again, reducing the amount of resources to each one, being a little more service oriented and less heavy handed, and reserving that for when we really need to. And then I talked about the corporate expertise, and we actually joined the MTC Joint Audit Committee last year or the year before. Multi-state organization where they have auditors that do audits of big multinational multi-state companies, and then they send the information to the states. So that not only gives us potentially additional revenue without having to use our own resources, but also gives us access to those experts to keep learning more about this area so that our own auditors can be more effective as well. Sorry to rush at the end, but.
Oh, thank you. I'm sorry that I made you rush at the end. Appreciate you coming in.
Appreciate the time.
That you do. Example of great government. Thank you, Craig.
Yeah.
Offer trainings to other parts of government.
And you won't have much time. Yeah.
Thank you all so much. Well,
Commissioner.
So we are going to dive back into Compact. We're going to do a very quick run through with Katie of some changes she made, and then we're going to hear from Jen and Lauren about the second Compact. We're not going to vote on either today. We're going to save that vote for tomorrow or Friday. And I think with that, Katie, can you tell us about your edits that were on request of OPR? So last night and after yesterday's meeting, some conversations. I talked to the healthcare committee and to Lauren at OPR, and so asked Katie to make a few quick changes on their advice.
Morning. Katie McGlynn, Office of Legislative Counsel. So there are two amendments to the social work compact. The first one is to give OPR authority to inquire into criminal background, to do a criminal background check on various professions. And in the statute, there's a list of all the professions they can do that on. Social work was not listed as one of the professions, but in order to join the compact, they need to have that authority. So that is now listed under this amendment on line 19. It adds social workers licensed under 26 VSA Chapter 61. And then the second amendment is changing the effective date. As you remember, the bill was introduced was a July 1, 24 effective date. Healthcare changed it to July 1, 2025. And the request is now to change it to on passage. So by striking out July 1, 2025 and inserting passage, that should achieve that.
And my understanding, we can hear this again from Lauren, is that they likely won't actually start doing the work until July of 2025, but by doing on passage, they get sort of in on the ground floor of actually developing the compact. Any questions for anyone? Great. Thanks, Katie. You're welcome. Appreciate your quick work on that.
No problem.
Lauren, I'm going to save comment from you on both of them until the second one. Hi, Jen. Thank you.
Good morning.
Morning. And folks, Nolan is inside the Zoom. Join us that way.
Jennifer Carvey, Legislative Counsel. So I will put up draft amendment here.
Thank you.
So I guess maybe I should put up, should we talk about the bill first? I realized maybe you don't want to look at the amendment until you've actually.
Oh, that's true.
The bill.
Yes, thank you very much.
So I'll put that one up instead. Oops. And then I will tell you why it is specifically here. So we are looking now at H247, which is an act relating to Vermont's adoption of the Occupational Therapy Licensure Compact. I think it's similar to a lot of the compacts you have looked at. This would allow occupational therapists to both keeps the option for the single state license, but to become licensed under the compact and practice in Vermont under the privilege to practice. This does allow the state, sorry for the motion sickness here, does allow member states to charge a fee for granting a compact privilege. So that's, I know, been an issue with other ones we've discussed. Some have not allowed that. This one does allow the state to charge a fee for the compact privilege. I don't know if you have any questions or need information about what occupational therapy is or what the compact does.
Big picture is helpful.
Okay. So occupational therapy is probably most useful to look at the definition. Right? And they have good language in here, maybe not. Well, occupational therapy is, as I believe the sponsor of the bill, who's one of your colleagues, Representative Stone, who is an occupational therapist, said, despite the name, it is not actually about helping people find work or stay in work or go back to work necessarily, but it's about helping people recover skills that they may have lost or had weakened as a result of an injury or illness, and getting people back into more operational life skills. So it's not necessarily anything to do with actual occupation. This compact, as you have seen with most of the compacts, the purpose is to facilitate interstate practice, making access to practitioners more available. It does continue the typical framework of having the practice of a healthcare profession occur in a state where the patient or client is located at the time of the patient or client encounter. And especially with the expansion of telehealth, there has been need for practitioners to become licensed in more states in order to serve patients who are physically located in those states. The compact does keep regulatory authority of states to be able to protect the public health and safety, so retains authority in OPR to enforce Vermont statutes and rules relating to the practice. There's also provisions specifically in here around supporting the spouses of relocating military members and allowing them to maintain a home state designation until a deployment is over without having to change to a different state. And has information being shared between states.
Sounds like a perfect compact.
It's a fairly standard compact in line with many of the ones, but not all of the ones you've looked at. I know I was here on one last year that was a little bit different. So if you're okay with this one, I will show you the two amendments.
Any questions about this one before we go to the amendments?
All right. I will first scroll down to the bottom just to show you that as enacted or as introduced, the act would take effect on January 1st of this year. It was enacted. It was introduced last year, so that date needed some sort of updating to begin with, and what the Office of Professional Regulation had requested and has been proposed by the committee across the hall. House Healthcare would change the effective date to take effect on July 1st of 2025. So this is the House Healthcare recommendation, is the delayed effective date to July 1st of 2025, which is what OPR had requested in testimony to that committee. And then this committee's proposed amendment would add a couple of new sections. So this committee would be saying you recommend the bill as amended by the Committee on Healthcare, so you're not looking to undo their effective date change. Be further amended by adding 2 new sections. The first is just like what Katie showed you, except for occupational therapists. So adding occupational therapists to the list of professions for which OPR may inquire into criminal background histories, because that is a piece of the compact requirements for eligibility. Katie and I have both added this as subdivision J. That's okay if they both get enacted. We'll make one of them K and move new K to L during our summer statutory revision process. So unless anybody be concerned, we couldn't have 2 Js. We can. We're just waiting to see which ones you actually pass.
Thank you.
And then section 4 would add a new provision into OPR statutes. This has to do with the fees, and this would be adding language like you did last or recently for other professions, including physical therapists. This would say that for occupational therapists and assistants, instead of the 180 biennial renewal fee, a licensee of a remote state under the Occupational Therapy Licensure Compact would pay a biennial $50 privilege to practice fee.
Questions about that?
So reducing that fee to $50 is because that's what the rest of the compact does? Or
This is what the state would be charging as the permissible member state fee for the privilege to practice. I will let OPR speak to the amount of the fee.
okay.
You want? Thank you.
Okay, sure.
And Katie and Ginger, I mean, you're welcome to sit in here, but please don't feel obligated. Nolan, hello.
Hi, can you hear me?
Can indeed.
Awesome. For the record, Nolan Langwell, Joint Fiscal Office. I will share my screen, except I don't have the ability to.
Marcia is on it.
All right. All right, can you see that?
No.
Oh, wait. There it is.
Yes.
Okay. Again, for the record, Nolan Langwell, the Joint Fiscal Office.
Parentheses.
Just similar to yesterday's, we're going to be looking at the revenue loss from the application fees and from the licensing fees. So looking at the licensing fees first, you can see there's a chart. If we look at how many people are from states that already have compacts, that would be about $19,000. If we take into consideration all the states that have legislation pending, that would add about another $15,000. So the range of revenue loss from licensing fees would be between $19,000 and $34,000. Similarly, on the application fees, their estimates between $3,400 and $4,800, and I have it sort of totaled here. Now, I also show which are biennial and which are annual. The similar considerations are, if more states come on to the OT compact and we join, then revenue impacts could be greater. Again, just like we talked about yesterday, the fees that the state would have to pay to the compact, there will be something, but we expect it to be nominal. Also, Jen talked a little bit about the privilege to practice fee. So remember yesterday's did not allow it, but today's the OT compact does allow it. There's no language in there, but if we did $50, that would offset it. And I would do a fiscal note to that effect, showing what the revenue offset would be if you guys were to do a privilege fee. I think that covers all the bases.
Nolan, in this compact and the other compact, is it both the loss of revenue is in 2026 and going forward?
I believe so. Yeah, I believe so. Yeah, here it is. Estimated revenue loss would be for fiscal year 26, correct?
Cool,
First bullet of the summary.
thank you. And that's true in the other one as well, yes?
Yes. I
Okay.
believe so.
Thank you. Any questions for Nolan? Thank you very much.
Welcome.
Lauren, would you like to join us?
Yes.
First, will you tell us why we made the changes we just made?
Sure. For the record, Lauren Hibbert, Deputy Secretary of State. For both compacts, a requirement of the individual who's applying for the compact license or for the privilege, depending on the model, needs to pass a criminal background check, which means that Vermont needs to conduct criminal background checks so that our Vermont citizens can participate in the compact as well. And Vermont has historically had a very restrictive is the wrong word, a more hands-off approach with how many people we criminally background check. There's a variety of factors in that. One is workload with the Criminal Justice Center. The other is we do ask everybody to attest to their criminal background in the application process. The list of professions that you saw in 123 is the professions that we actually get a printout of the criminal background check. But for every profession that OPR regulates, we do have people self-attest. And we do find that people lie occasionally in those self-attest applications, and we do prosecute people who lie in their applications. So we do find that that has served, for a large part, a good public protection role. But for the compacts, the expectation is criminal background checks. And we are one of the few states that does not criminally background check every single one of our licensed professionals. When we implemented the nurse licensure compact, for instance, we were one of the last 4 states. So it is becoming more of a national standard, and Vermont is coming along with that. But there are workforce considerations as well.
And so if someone's criminally when we join this compact, if someone has a criminal background in the criminal background check, does that mean that they can't get a multi-state?
Typically, and I would have to look at the language of the compact, it's if you have a felony.
Okay.
And for instance, with the nurse licensure compact, you cannot have a compact license if you have a felony. But our policy in Vermont is you can have a felony and be licensed as a nurse in this state if the felony of which you're convicted is not substantially tied to the profession.
And for these 2 compacts that we're talking about, will you follow that same policy that people can start
Yes.
in state licenses? Okay.
Yes.
Thank you. That's really good to hear. Representative Andrews?
You just sort of referenced a backup in getting background checks. And so what does that look like in practice? I'm just trying to make sure I understand your testimony. You're going to allow the self-attestation until that information gets to you from the criminal background check. Is that accurate?
What we do is we issue the single state license while we're waiting for the criminal background check so that the individual's allowed to practice here. But until we receive the results of the criminal background check, we cannot allow them to join the compact.
So if someone comes here to work through the compact, it's their home state that they do a background check
That is
to rely on?
Yes. That's the promise. You know, these compacts are an agreement between states. So it's our state, by passing this compact, is promising to do a criminal background check, just like all of our sister states. And then we have an agreed upon standard by which we allow licensure or we don't, which is the marker of a felony.
But if I can follow that discussion, if the compact rules do not allow, as we do, someone to be licensed under the compact rules who has a felony conviction, then that essentially eliminates folks from Vermont who can be licensed under our rules.
That is correct. Then they would come to our state and get a single state license, which you can still do if are living out of state. So you could live in a compact state, have a felony, not be eligible for the compact state and compact license in, say, New Hampshire. But what that would mean is then you would come to Vermont and apply for the single state, and we would license you.
The language that we looked at for the two bills with the amendments, is that agreeable to you?
Yes, it's perfect.
Representative Me.
Just to follow on, it came up earlier, I think yesterday or the day before. One of my colleagues said, of course, we're going to lose OPR revenue for reasons you have explained to us, but there may be corresponding gain to the general fund through income tax. Apropos of the presentation that we just had from the commissioner, I'm wondering who, commissioner or OPR, ought to bear some responsibility to make sure that people who apply for compact licenses, whatever the occupation, understand that Vermont is one of those folks who have an income tax. And if you practice in this state, whether it's electronically or flesh and blood, you file.
Yeah, so it would be complicated for OPR to be the conduit of that information because for some of the compacts, as you heard me say yesterday, we don't even know who is practicing in this state. I do think that that is a role that the employers can take on, and hopefully they're getting clear guidance from the tax department.
In many cases, there's no employer.
That can be true, yes. Depending.
Thank you. Any other questions about the two specific bills that are on the table? Okay. You have brought an idea to us as well, I believe.
Yes, I have. It's in the on the third page of my testimony, highlighted as recommendation, allocation requests specific to the OT compact, but also some language around a funding model working group, which is the title that I came up with last night. Happy to have it shifted. But specific to the allocation request, we are asking for a 78,000 one-time appropriation for the implementation of this compact. That is the revenue loss of 2 biennial cycles for this profession, and our IT updates.
Lynn, is that appropriation in the bill?
I don't believe either one is.
It is not in the bill. Because this is the first
Okay,
time
thanks.
hearing of the request.
Okay.
And then the creation of a group that would consist of joint fiscal, legislative council, and the Secretary of State's office to really delve into the funding model at OPR. This group will review the current funding model with keeping in mind that we regulate 51 professions, including over 80,000 licensees with a staff of 40. As this committee is well aware, OPR has a special fund that's funded only by licensee funds that enter into the special fund and then are siloed if the profession is a board profession, and are pooled if it's an advisor profession. With the enactment of compacts and telehealth licensure, our revenue has decreased. There is broad support for policies supporting greater access to out-of-state licensees to Vermonters and allowing Vermont providers to continue to providing care to clients across state lines. However, there's also a common understanding that increasing fees on Vermont licensees, which is what we inherently do as we decrease the licensee population that lives inside Vermont, to subsidize policies that incentivize and allow out-of-state licensees to practice in Vermont without paying a fee in Vermont is disfavored. Further, any additional restrictions in OPR's budget to subsidize out-of-state licensees will have a negative impact on OPR's public protection mission. This working group should review how other similarly situated states, of which there are some other rural states that bring quite a few of out-of-state professionals, are funded and organized, and consider the following questions. Should OPR continue to be funded solely through licensee funds, or should it be funded partially through the general fund? Should OPR continue to silo funds by boards, or should the funds all be pooled? And are there other sources of revenue that could support OPR's public protection model?
Deputy Secretary Hibbert, I know CSG is behind a lot of these compacts and I understand that it's a good policy. I'm wondering, do they have any sort of best practices for dealing with the revenue implications with some of these compacts? Is that something they've weighed in on at all, or is it?
It's something that I've asked them at conferences and also reviewed their website. I haven't seen anything particularly on point from them. I think what happens is a lot of the compacts are contemplated for larger states that just simply have the benefit of the economies of scale. So losing, 20, 30% of their population does not affect them in the same way that it does ours. But that's a good question. It's something we need to continually ask and push on, and I'm happy to do that.
Or these appropriations that you're seeking, are you seeking those right now in budget adjustment or FY 25?
FY 25.
FY 25, okay.
If I'm correct, when OPR does not get fully funded by ISBs as the model suggests it might, although we all know in practice it doesn't, you get an appropriation from the general fund as it is right now to make up that gap. Is that how, or appropriation's not the right word?
No, we do not.
No, you just,
We operate at a negative balance.
okay, got it. Thank you.
So the 78,000 one time, there's no new positions. We're going to work with somebody from Joint Fiscal, Ledge Council and Secretary of State.
So the 78,000 is a separate thing from the working group. The 78,000 is to attempt to solve the problem that we have with the lost revenue of joining this compact. And then the working group is true. There are no new positions. It would be our current staff at OPR working with Joint Fiscal and Legislative Council.
Thank you. I think we're going to think about all this and figure out what to do next. Really appreciate you giving the starter thoughts to actually.
I'm happy to. And if you folks want me to come back, I'm happy to do that. I did just want to say that I did add the NLC Compact Assessment Impact Report to my testimony.
Yeah.
It was filed today with legislative reports, but it really elevates and illustrates the issues that Vermont is facing with joining compacts, specifically the nurse licensure compact, which has a huge impact on OPR because of the significant number of nurses. So nurses are a large revenue stream for OPR because we have so many. And joining the compact has negatively impacted the OPR's budget. So I hope you review the report. I hope it's useful in your considerations, and I'm happy to come back.
Thank you very much.
Thank you.
We are going to take a break until 11. And then we're going to talk about captive insurance.